Hi guys, in this episode, I want to talk to you about 5 factors to consider when when you're looking to do a short sale. Whether you're an agent that's looking to help a homeowner, or if you yourself are looking to do a short sale, the 5 factors. The 5 factors. The first one is the bank's going to look at is how much money do you have in your bank account. Okay, so one of the first requirements to do a short sale is you need to have some sort of hardship. And so one of the first factors that the bank is going to look at is how much do you have in your liquid personal checking account, and not your retirement account, but your personal checking account. All right, that's do you have $500? Do you have $50,000? And so that's a big factor when you, like, let's say if you're an agent, that's a factor that's going to play a critical part when you talk with a homeowner. The second factors to consider is how much do you make in relationship to how much you spend. So they're going to look at your income to debt ratio. And so when you provide to when you, the homeowner, or the homeowner that's applying for the short sale, they're going to ask for income to debt ratio, so income to expense. So, and the reason I bring this up today is because I was recently speaking with an agent, and the agent was asking, whether this particular homeowner can qualify for a short sale. And so I went through these factors, and so these are some of the questions that you need to ask the homeowner to kind of pre-qualify them. And so the second factor is the income to debt ratio. And so you have to kind of ask them, like, how much do you have left over? How much do you make per month, and do you have money left over after all your expenses, your monthly expenses? And the third thing is, how much do you make? So you're not gonna, sometimes it's kind of awkward to ask the homeowner directly how much you make, but just a roundabout figure, because at the end of the day, the bank's going to ask you for your tax return. And so when you provide the tax return, the bank is going to look at how much you make. And even if the bank doesn't ask you for the tax return, you're going to have to fill out a form called the 4506T, which the bank can, once you sign it, the bank's going to go to the IRS and get your tax transcript for the past 2-3 years. And so so you can ask them, how much do you make, and can you validate that in your tax return? And so that's one of the third factors that's going to play a role. And the fourth part is, are you current on your mortgage? Now, you can do a short sale when you're current on your mortgage, but that plays a critical part in whether you qualify for a short sale. I mean, I'm not the one that's gonna validate or approve the short sale, but in all transactions or deals that come into my pipelines, or that come to me, or an agent comes and talks to me about a potential short sale, potential homeowner that may qualify for short sale, those are some of the questions that I need to get answers to before I can say, hey, the homeowner can do a short sale or not, right? And so this is not a straight guideline that's available out in the public, and every bank is different, but that's kind of some of the filtering, I guess, some of the ways that I filter some of my short sales and some of my transactions. And lastly, the last thing that plays a critical role is, after the bank looks at all of those 4 components, those four factors, the bank looks at what is the likelihood that the homeowner is going to default on that mortgage. And so if that answer to that question is a yes, then most likely then they're going to qualify for that homeowner for a short sale. All right. So I hope these 5 factors helps you to qualify, if you're an agent or an attorney, to qualify the homeowner to see if they qualify for a short sale. All right. Bye now.